We're earning over 500,000 now per year in dividends. As you can see below, we were earning 600,000, and with the new rate cut by the Fed, the 50 basis point rate cut by the Fed, we're going to have 5 big impacts to the portfolio that I wanted to share with you. Okay, so yes, we're earning over 500,000 per year in dividends, living financially free from our 9-to-5s. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. We're also outperforming the market with this approach using margin, Yieldmax, Cornerstone, Defiance, and some margin usage. We're up 25% for the year, and the S&P is up 17, the Nasdaq's up 17, the Dow's up 9, the Russell's up 7. So we're beating all the indexes on a year-to-date basis, and on a daily basis, we're at 19,000 today, or 1.59%. We're actually up more than that. If you go to our complete view here, we're up 2.3%, which beat the Dow and the S&P. We're just a hair under the Nasdaq, but that's what we want. We don't want to be exactly in line with the Nasdaq, because that means that we'll fall by the amount of the Nasdaq when the next correction comes. When we're using margin, we want to be safe, and we want to be in between the S&P and the Nasdaq. So today we're at 19,000, but that's not what's important. What's important is the percentage gain, okay? Was that correlated to the indexes? And yes, it was today. We beat the indexes. So a lot of people think that when you use these dividend funds, these high yielding dividend funds like Yieldmax, Roundhill, Cornerstone, and Defiance, that you can't get days gains because they erode and go down on their charts. Well, you're seeing with my portfolio today that that's not the case, and we were able to do this with also our staples names. I want to just say I apologize in one of my previous videos for saying that I bought all of the names in XLY. It was XLP that I was referring to. I got my ticker scrambled. Yes, I own most of the stocks in XLY, the dividend paying stocks. The XLP is weighed down by Procter & Gamble and Walmart. They're some of the largest weighted stocks in that ETF. So I wanted to buy all my other stocks, which I've showed you in past videos, okay? All these staple stocks that you see here, for example, Procter & Gamble up 4%, Diageo up 4%. We've been down in that stock actually, but we've been dollar cost averaging, and now we're up in that. This is Diageo right here, by the way. This Johnny Walker. And TJ, what is Kraft Heinz? Okay, Jello, good job. So Jello right there, that's Kraft Heinz. We're up significantly in Kraft Heinz, as you can see below. Okay, Mondelez animal crackers. Okay, okay, slow down, buddy. Here are the gains for Mondelez right here, as you can see below. Okay, Mondelez. There's Kraft Heinz 8%, Mondelez 13%. These stocks are still cheap in my opinion, okay? I got these at the absolute historic lows, and so I think that they still have some room to go higher, but these have been helping me during the recent down market with tech. All these staple stocks move higher usually when tech is down. So these defensive names, staples and healthcare, have been really helping out a lot, as you can see by these gains here. I mean, Clorox 20%, Hershey's 5%, 16% for Crown Castle, and 71% for SLG. These are real beneficiaries of the rate cut now. Real estate. TJ handed me this Lucky Charms. Is this your favorite, TJ? Mm-hmm. Lucky Charms. Yeah, that's General Mills. And past.
Show that to me.
Yeah. Okay. You want me to show you General Mills?
CVS.
Here's General Mills right here, 17%, as you can see there, buddy. Okay. All right. So General Mills, all these staple stocks, once again, they're working well. And again, I want to share with you 5 ways that this rate cut by the Fed is going to impact our dividend portfolio. So I want to share with you that, first of all, Cornerstone is a 4-star fund. Yes. Okay. CLM and CRF are 4-star funds. And this is going to be a big beneficiary of the rate cut, because as you can see here by the premiums of CLM, they're only 6%, whereas CRF's premiums are 16%. So I think that CLM is going to play catch up to CRF because of this rate cut, and a lot of value plays are going to play catch up, you know, energy, real estate, banks. This makes sense, okay? This makes sense for CLM to catch up in premium value to CRF, because Cornerstone averages 20% premiums per year, and they have a 21% dividend. The best part about Cornerstone is it drips its 21% dividend down at the NAV. So you get these 16% gains every month with the Cornerstone drip, okay? So you get the 21% dividend, and it drips it down at the bottom for 16% gains, as you can see there. So there's no other fund in the world like Cornerstone, and it's indexed, and that fits with our margin strategy. We know that at this channel, we have to stay completely indexed to get ahead, okay? My margin debt of around $377,000, as you can see there, will be paid back in less than 1 year because my dividends are over $500,000. All right, so the first way that this rate cut impacts our portfolio is it's going to make CLM perhaps catch up to CRF. Well, that's just going to help with our performance going forward if CLM catches up in performance to CRF. Just remember to play Cornerstone properly around its rights offerings, and that's in my Volume 4 e-guide if you need more help playing Cornerstone. You get free access to Discord for life when you buy my e-guides, and this is where we alert you of the Cornerstone rights offering announcement. So we give you the Cornerstone rights offering announcement on Discord, and that's how we stay indexed, okay? It's with Cornerstone, Defiance, Roundhill, and some Yieldmax funds. As you can see here, CLM was up 0.53% today, whereas CRF was actually down. And I think CRF was down because it's just been up so much lately. It didn't even pull back really during the recent correction. And so I think that this is just a sign of strength for Cornerstone, for CRF. I think all things can rally with the new rate cut, but value names are going to be helped in particular. And that's why, again, I think CLM was up 0.5% today and CRF was down. So the rate cut's really going to help with CLM, and also it's going to help with our margin plans, okay? Because yes, we earn over $500,000 in dividends, so that's going to pay back our margin debt in less than 1 year. But we don't want to pay unnecessary margin interest if we can help it. I've negotiated down my margin interest twice. Many of my clients who bought my e-guides did the same thing. But now we get another reduction in our margin rates because of the Fed rate cut. So when the Fed cuts rates, our margin rates get cut, and that's a big tailwind to our portfolio. So this is going to help with our monthly expenses. Each month I'm going to have less margin interest, and again, it was already negligible for me, but this is going to help save, you know, a few $100s every month. Okay, so this is a very big development. Okay, this is going to help a lot of investors take more risk in the market, and you shouldn't take more risk with margin just because your rates have fallen. I like to always keep my margin at small enough amounts to where my dividends can pay them back. Other people push it to the limit. That's not the way to do it in the event of a market crash, but I'm trying to live totally financially free out of my brokerage account. I don't have an outside job or something to pad my brokerage account when I'm in trouble. I have to live out of this and be safe at all times. So I can't afford to put too much margin on, but we're earning over $500,000 per year and earning $19,000 on a given day. Like today, we're going with the indexes, perfectly correlated with the indexes, even with that erosion that you claim is happening with Defiance and Yieldmax. But that's just not the case. You have to factor back in dividends and drips with Yieldmax, Roundhill, Defiance, and Cornerstone. Okay, Cornerstone, you just have to factor in the rights offering for that as well. And Cornerstone, it's 30% maintenance. Okay, QDTE is 50% maintenance. Cornerstone is 30% maintenance. That's why I have so much in Cornerstone. Okay, you can't find too many funds out there that are high yields, that are high quality, that are also 30% maintenance. QQQY is also 30% maintenance. That's why I put so much in Defiance, and it was up nicely today. Okay, it was up around 1%. This is after hours movement right here, but it was up around 1%. Yes, the NASDAQ blew it away, but we're getting huge dividends from QQQY and some up day participation, and that's all that I care about when using margin. We're down less on down days because of Cornerstone and Defiance like QQY, and then we're up on up days, not as much as the index itself, but that's why I have all these other names in my portfolio, like those staples names that I mentioned and other miscellaneous funds that if you follow my live portfolio, you can see at any time. But I have all these other names that help me get my one-for-one correlation with the market. So you have to have a unique blend with all these funds, but QQY, it helps me on down days and also helps me on up days, just like with Cornerstone. And the best part of these funds is that they're 30% maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. Maintenance is the key to everything that I do here. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this, around 1 million in purchasing power, to get ahead, as you can see here. But then my available withdrawal is the bigger key. Okay, this is what I always watch. If this gets to zero, you're in a margin call. Well, I can withstand over 20% corrections in my account at all times and still withdraw freely to pay my bills. I can swipe my E-Trade checking card and go wherever I want in this world. I can buy cars, clothes, shoes, whatever I want with my margin debt, and it acts like a credit card but with lower rates. So I can do whatever I want with my E-Trade checking card, and the key is just avoiding margin calls. And so you have to have low maintenance names to do that. You can switch brokers to get lower maintenance, but they might not have the special drip for Cornerstone, so keep that in mind. So you have to be able to withstand over 20% corrections at all times. And if we have beyond a 20% correction in the span of a month, I always say that I have my put options on just in case we have an overnight crash. So if we crash and go down 30% in a 1 month time period, we would make more money than we lost with our put options. And if we had a correction over the course of a year, we're not worried about that kind of correction because our dividends would just keep paying us back each month. So our put options help us sleep at night, and they ensure our portfolio from a crash. If you need help hedging your portfolio like I do with put options, that's in my volume 5 e-guide. So you have to have index names like Cornerstone and Defiance, and you have to have low maintenance at that. And again, we like CLM right now because with the recent rate cut, that's going to really help CLM, and that's why CLM was up today and CRF was down. So it's going to help with our margin, okay, this rate cut. It's going to help with CLM, in my opinion, and value stocks, and it's going to help with our margin rates, all right? And that's really going to act as an extra tailwind to our portfolio. It's going to give us more money each month to live on. The third way that rate cuts impact my portfolio is it's going to help with our sold options with FAS, because banks are primarily driven by net interest margins. And so if we get a rate cut, that's going to help with banks and IMs. So we sold puts on FAS because banks are going to benefit from the rate cuts. And when we sold these puts, it lowered our margin debt. So that's why we sell these options. It lowers our risk because when you sell the options, they give you the premiums, which then gives you a lower cost basis, and that lowers your risk, and it also lowers your margin. Don't be scared of selling put options just because you've never used options or you only like to buy them instead of selling them. Selling them is much cheaper, and again, it lowers your margin, lowers your risk, and you get performance on up days. We're up 100 in FAS today, and also I sold puts on IWMY, but we'll get into that in a little bit. If you need help selling put options like I do, that's in my volume 6 e-guide. So it's going to help banks, this rate cut, and it's going to help the economy, obviously, okay? If we have rate cuts, people are going to spend more money, people are going to buy more homes. It's obviously going to be good for the economy, which is good for our indexes, which is good for our performance, like on a day like today. We're up 19,000 today. Don't forget, when you buy my e-guide, you get my phone number for life, so you can call me anytime you need me. Check out my phone and what my activity is like in my phone. This is just a day in my life, okay? Check this out. It never ends, okay? I'm here for you guys and gals at all times. You can text me anytime you need me, and when you want to reach me over the phone, just text me and we'll set up a time. That's how it works with most of my clients. So even though over 1,000 members are in my Discord chat room, I'm here for each and every one of them whenever they need me, all right? So keep that in mind. Thank you. So the fifth way that these rate cuts are going to benefit our portfolio is they're going to help with small caps, okay? We've been going big into Roundhill and RDTE, as you know, and we've also been selling puts on IWMY, as I alluded to before, okay? So this lowered our margin by another 5,000 approximately with IWMY, and we also bought RDTE. So IWMY, it was up small for us today, 30 bucks, but look at our TNA puts. We also sold puts on TNA, as I've been saying in past videos. Yes, we still own a little TNA, but we've sold puts as well on TNA. So that was up 82 bucks for us, but when you put all these together, they add up a lot, okay? ARKK, that's another small cap fund, pretty much. They all add up, okay? So when you put them all together, they give you about $19,000 worth of days gains. That's how I'm getting so much performance. It's with those sold options, okay? It's with Cornerstone and that NAV drip, and it's with Roundhill and Defiance using margin, but then it's with those options because I'm getting such high premiums that's adding to my performance, okay, each year. So again, if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, where I'm always here for you if you need me. So remember that, and if you like this video, click like or subscribe, and I'll talk to you soon, everyone. Thanks. Say bye, TJ.
Bye.
Take care.